We're going to do a brief video on Unity stock. That's Unity Software Inc. And we've got a daily chart on here for you with a 5-day moving average in green, a 20-day moving average in red, and a 200-day moving average in blue. Let's go back and take a look at about January, mid-January of 2022. We see the stock crossed over the 200-day moving average and formally entered into a bear market. It stayed in a bear market and is still in one today, and we can see that it respected at some points the 20-day moving average coming down here, and sometimes it did not respect it. So this is a classic bear market drop off and then into a sideways movement. As we discussed before, once the price gets so far away from the 200-day moving average, it's either going to rally back up or it's going to go sideways until it gets close to it. That's just the way it works. Not always, but a large percentage of the time. So this stock has spent since early May, mid-May, all the way through now till today, coming across and trying to get close enough to this 200-day moving average to give the market something to deal with. It did put in a good rally from about 34 up until 58, but you can see it didn't even really get that close at that point. The 200-day was about roughly 90, so it didn't get that close, and it just ran out of gas. That's not a good sign for its an early exit from a bear market, I should say. It's still working its way across, and that's what it's doing right now. You'll see that the price is below the 5-day moving average, below the 20-day moving average, below the 200-day moving average. So the stock is clearly still in a bear market. It's down 12% today on 13 million shares. Average daily volume is about 9 million shares. It's down $5. So it's still in a bear market, as I've said multiple times now. So what do I think? What I think is this stock put in a good rally here. Not a great rally, but a good rally. It shows there's people willing to invest in it, to get behind it. I think if we get another one of those, we'll probably get to this 69 level if we get another one of those. By that time, we'll be just below the 200-day moving average. So I don't see any particular reason why we could not necessarily test this 200-day moving average at 69 by I wouldn't step out and say my gut says it's not going to be next week, but my indications of looking at this says it might be next week. Let's just say sometime towards the end of September. If it's going to happen, you might get a rally up as high as 69. But keep in mind, we just had a rally to 58, so that's not that big of a deal. It is obviously aggressive coming from a high today of 39, but that's what I'm thinking. Again, my opinion only, for entertainment purposes only. But if we could get that, if we get several things. Number one, we need price to get above the 5 and the 20. We need the 20 to get below the 5, and we need to provide support to this price to aggressively move up. We see we moved from July 25th to August 12th, so that's about 3 weeks, and we went up, what is that? Let's call it $15 in 3 weeks. So I would say you're probably going to need more time than I'm predicting. Let's just say later September for that, and at that point you're probably looking at more like $66. So if it takes longer, it's hard. It's really hard to get a good feel of this stock for some reason. But 66 to 69 bucks, late September, maybe early October, right around in there. That's assuming it happens. If it doesn't happen, my guess on this stock is it could break down. You've got to get this stock away from where it is right now, otherwise it's in danger of breaking down. And just for sentiment reasons, if it's not going up, how much longer can it go sideways? It's been going sideways here for a long time, and the next or in line with going up, if it doesn't do that, it's probably going to stab down and test these lows of May 12th, this $29 low. It's a lot closer to testing that $29 low than it is to making some new highs. So again, for entertainment purposes only, my opinion is this stock probably has a shot of rallying, but in order to rally, it has to get this price above the 5 and above the 20-day moving average. If it doesn't do that, then it's probably going to test these lows that were established early in May. Bottom line is this stock's in a trading range still. It's a bear market stock still, and it's a trader's market until it breaks out above this area, this 64 to 69 area, and then ultimately closes above the 200-day moving average. This stock's still not, it's a trading stock. It's not necessarily an investing stock right at the moment, and it does have the downside risk that we just discussed. Again, all for entertainment purposes only, and all in my opinion. Let's take a look at what RBAM Research offers. We do not cover that stock for some reason. I will check and see why. We put these out today for algorithmic trading entertainment purposes only, and you can see they're out for today, the 13th. We cover 190 plus stocks. They're buys only. We have 1, 5, and 20-day holding periods on these stocks, and you can see zeros means we don't have a positive expectation on these stocks today, and so the algorithm does not put anything out. We do have a lot of entries on here today. Yesterday we had almost none. We have Macy's, General Electric, American Airlines, Ford, and so forth. And again, buy today in this column, assuming your own analysis says it's a good idea, and you would close out the end of trading, worst case end of trading tomorrow just before it closed at a loss, or take your profits sooner. And the same thing over here on the 5 and the 20. If you bought in the 20-day column after you did your own analysis, you could take your profits as soon as you got them, or worst case, close out at the end of 20 trading days, just before the market closed on the 20th trading day. Again, these are trading days, not calendar days. You can get all of these for 190 stocks and a lot more at rbamresearch.com, absolutely free, no credit card required, and that is RBAM Research. There's a link in the description below. We cover 190 stocks, the major forex pairs, BTC on the cryptos, and the most liquid futures contracts, again, updated Monday through Friday by 7 a.m. If you like technical analysis, you like moving averages, please let us know in the comment section below what you like about them. If you do not like them, please let us know in the comment section below and tell us why you don't like them. Please click the like button if you like this video. If you want more videos like this, please subscribe. And keep in mind, everything you've seen or heard on here, including the entry prices and my commentary, is all for entertainment purposes only. You can't use it for anything other than entertainment. You have to do your own analysis, and you definitely trade at your own risk.